and we are purchasing vacation rental houses in the Smoky Mountain. So our team is Vestio Capital. We offer a scalable investment in the Smith Creek Reserve, which is the current offering. And it's about a newly developed community where the houses are luxury style rental community in Smoky Mountain. Okay, so today we're going to go over a few things. One, I'm going to share with you the executive summary, like what we're doing. I'm going to talk to you about the vacation rental investment overall, who does this thing, why it's helpful, why you should think about it. Then we're going to talk about the market analysis, like why did we pick Smoky Mountain for our project. And then we'll go over the property information, the property we are purchasing, the risks in investing in short-term rental, vacation rental properties, financial analysis, like what we are projecting in terms of revenue, in terms of our net operating income, and overall what investment opportunities are available for you guys. Okay, and the end, obviously go through next steps that our investors can take. Also, like while we're going through this thing, I'll stop after every few sections. If you have questions, you can put it in the chat. Me and my partner will receive it, and we will go through them one by one. If you don't have it, we can wait until the end as well, so you can go over them. Okay. Right now we are working toward acquiring luxurious cabin in the Smoky Mountain community. The community is called Smith Creek Reserve. And the reason, one of the prime reason why we are investing over here is market is obviously strong from vacation rental perspective, but the amenities and these new house built and the luxury they provide, there is no other product in the market like this. And we'll go over that in detail in a second. Okay. Overall, in this project, we are purchasing 19 houses. 11 of them are 5-bedroom houses, 7 6-bedroom houses, and 1 is 8-bedroom house. By the way, in the whole community, there are only 3 8-bedroom houses. We are purchasing 1. The developer is keeping 1 for himself, and he's running as vacation rental. And the third one he'll be building sometime next year. But that one is a little bit farther out, not close to the some of the amenities that this community provide. Other thing is Smoky Mountain. So area-wise, Smoky Mountain has been known for vacation rental. It has offered good returns for the investors. It's a booming tourism market, has grown a lot, which we'll cover in a little bit. There are limited luxury cabins, and that's one of the things that we are focusing on in our project, luxury cabins. And the other last thing is access to the major cities has helped a lot in growing the tourism and also the luxury part of the whole project, which we'll discuss in a minute. Business model, we are purchasing up to 19 these cabins. We're going to manage them. We are vertically integrated in the area, and our expected returns are we want to generate 16 to 18% IRR for our investors with equity multiple of 1.9 to 2.1x, cash on cash return of at least 8% yearly, and hold period of 5 years. So 5 years are base case, but I'm going to talk about a couple of other options that we would consider as we get closer to the year 4 and 5. Okay. Overall, our company, myself, Deepak Kaushik, my partner, Arun Goyal. So we have been active in the vacation rental market and actually multifamily apartment market for the last 10 years. We own and manage vacation rental houses in New Jersey, New York area, 150 of them until 2020. Currently, we also have investments in 50 properties across Outer Banks, Snowshoe, and Vegas. On the multifamily apartment side, we are right now, we own and manage about 500 plus multifamily units across South Carolina, Georgia, Florida, and across all of our investment. A few things we focus a lot. One is obviously our underwriting and macro analysis of the area we want to get into. We apply our vertically integrated teams across these projects to make sure we are very efficient in running these properties. And also we focus a lot on securing the cost-effective funding from our lenders. We have numerous relationships that we have built in the past 10 years or so that we have been in business. And we try to make sure we get the best deal for our projects and for our investors. Mission statement, this is an important one. I think I want to highlight a few things as well as we talk. To provide travelers with high quality, that's important, comfortable, and well-managed luxury vacation rental properties. And we want to make sure these three words are inserted in everything we do throughout the guest customer experience. So business goal, as I said, we want to acquire up to 19 properties by Q2 of this year. That we all want to offer these luxury experiences for our guests, which we see as a gap in the market, and also generate equity multiple of at least 1.9x for the investors. Okay. So a little bit touching upon our experience, more like we ran like 150 luxury vacation rental in New York, New Jersey area. Some of the pictures, like if you see, these are the apartments right across the river on the New Jersey side. We used to have guests coming in from, internationally as well. New York obviously attracts a lot of visitors for business, for vacationing. We grew the revenue to 10 million a year. We focused on high quality photography and excellent customer service. Those two are very important in this business. Everybody is looking at pictures and deciding if they want to go to the place or not. So that becomes very important. We cater towards luxury clientele over there as well. As I said, domestic and international travelers. And we exit the project in 2020 when COVID started. So key thing about the vacation rental and what we need to focus on, and I think everybody on this webinar should know, what's the foundation of success. One, as I said, people are booking places. I mean, including me, my wife, we go to Airbnb or we find other vacation rental websites and look at pictures and we decide to stay there or not. And reviews, which comes with excellent service as well. So we want to make sure we give great service to our customers, so we get 5 stars reviews for them. And also marketing, which is very important, because people are bombarded with a lot of options when you start looking for it. Then how do you differentiate yourself? How do you build your brand? How do you cater your customer to the brand and make sure that you stay true to it? All those things kind of come into picture. And finally, guest satisfaction overall end to end. Previously, when we worked on this thing, we used to have 8 a.m. to 10 p.m. customer service available 7 days a week. Our internal goal is that we respond to any customer query within 5 minutes. That is our target time frame. Also, issues will come, happens all the time. Even now, like one of the guests actually yesterday sent us a message saying, one of the swimming pool was not hot enough. So, we all, the customer service kind of jumped into action, talk to people, making sure they give the right information to the guests. And, they were able to rectify it within half an hour, 45 minutes. But the point is that we need quick problem resolution whenever guests have any issues. On-site support, we had it at the time as well, dedicated staff available in the apartment building, service first approach, and reputation for excellence. And all these things, when we did, focused on, you can see like our booking.com, Airbnb reviews, were like very close to what you can get maximum. So 9.5 out of 10 in booking.com, Airbnb was 4.87, and Airbnb was 4.9. And I highlight these three because these are 3 big listing sites, obviously, that drive traffic and also bookings for vacation rental. Okay. Now, why vacation rental? Like, what's the benefit? So maybe some of you guys have done vacation rental investment before or real estate investment, but just want to cover up if you have not done this before, like why it's beneficial for anybody to think about. So in the vacation rentals space, you purchase property which is intended for short-term stay, anyways from like 2 days to like 14 days. You generate income based on a nightly booking in the high demand areas. So high demand is key here, so that you are getting a lot of bookings, and also you are able to charge higher rate. Benefits, higher cash flow. So if you take long-term rental properties versus short-term rental properties, short-term rental properties are generating more cash flow than long-term. The reason being, in long-term, you have one rate that you're paying, that you're charging them for the whole year, and you're signing a lease. So you cannot fluctuate your rate based on demand. In the short-term rental, like right now, we are booking for summer, and literally people are paying upwards of $1,600-$1,700 a night for summer months. But the same rates could be as low as $400-$500 in January, when everybody's kind of back to school, back to work, and they're not traveling as much. But the average rate is high enough where you are able to create more cash flow. Nightly rates, as I said, adjust based on demand. Any event can trigger more demand in the area, where you can even see doubling the rates of your nightly rates. So I think another thing you can increase your income more is by adding premium service amenities. Think of it as, you have a family of four families coming in, family of four coming in, total 50, 16 people. They are celebrating, let's say, somebody's graduation or birthdays or any milestone. And we plan to offer service where you can say we will have a chef that can come and cook at your place, or masseuse service, they can come and do it, or even pick it up from the airport back and forth. All these things are added service, but they have a premium on it, where outside of the service itself, where we can generate revenue. And finally, diversify your portfolio. You may have your own apartment that you purchased, that you put on long-term rental, or you put money in a REIT or your stock market, or your multifamily, but you want to now diversify your portfolio overall. So this gives you another option to invest your money to generate cash flow. Other few benefits which are very attractive to our investors. One is depreciation. As you know, like in this project, we are purchasing these houses. So these are total $2 million house, and there are 19 of them. So total $45 million is a total project cost. So we will be able to depreciate these houses in year one. So if somebody's investing $100,000, anywhere between $40,000 to $60,000 of depreciation we can give back to the investor. So they can apply that to the passive income that they are generating from this project or from any other project, and reduce their overall taxable income. So definitely a good benefit for our investors as they think about this project. Another thing is rental properties. These are new houses, and properties are a tangible asset, and it obviously appreciates over time. So your money is going somewhere where the property will be appreciating. And obviously, that's why we focus on macro of the area. How's the area? How are the things progressing? How's the population growth or tourism growth and overall growth in the market, so that the prices will appreciate over time. Another thing is turnkey sale. Like these houses obviously are fully furnished. When you're going to sell, whoever is buying it can start earning money day one. So from sale perspective as well, it's not like somebody has to wait. They can buy and start generating revenue for themselves, which is plus. And last thing, which all of our investors likes, and they all ask it all the time, that if they invest in it, then yes, you'll be able to go stay in these houses. We'll give a good discount for our investors. At a time, obviously, when it's not a peak season, when obviously if you're investing, you want to generate more revenue. But we'll definitely want your family, friends. You should go there with a good discount, stay overnight, and enjoy all the amenities that we have, which we'll discuss in a second as well. Okay. So what's our unique selling proposition? Like why we picked this? One, prime location. So overall, in the Smoky Mountains, the tourism has surged 18% since 2016. A lot of these things happen because of a few things. One, COVID actually opened this area to a lot of new visitors who have not considered going there earlier, because people are going there, staying in a cabin for a week or a month as they're working from home. Number two, there has been a rise of 3 cities within 3-hour distance from Smoky Mountain. And these cities have increased their population, has got a lot of good companies moving there. People are earning have gone up, and they're more disposable income. One is Atlanta. Atlanta, right now you have Google office there, Capital One office there, Microsoft there, Meta there, like all the big tech companies there, obviously hiring a lot of people. Then if you go to Charlotte, all the banks moved there in the last 10 years. Then if you go Nashville, again, a lot of growth in the past 10 years. And all these 3 big cities are about 3 to 3.5 hours from Smoky Mountain. Atlanta actually itself drives about 1 million to 2 million visitors a year to Smoky Mountain. And other thing to note is that this area, Smoky Mountain, you can drive to it. 1/3 of the US actually can drive to it within a day. So think of like Florida to Smoky Mountain is probably 8-10 hour drive. Think of Maryland to Smoky Mountain is like 8-hour drive. Like I live in Virginia, door to door, I'm 7-hour. Right? So if you go like 8-9 hours, you can even touch through the Pennsylvania area as well. So, and obviously the concentration population over here a lot, everybody can drive. And if you go west, you can even go to Missouri, and they can drive up to Smoky Mountain. So this is actually very key because, if you are 15, 16 people want to go somewhere, let's say you want to fly to Florida, like even Orlando, everybody's spending $300-400 on a ticket plus, Uber drives, Uber rides, plus, your luggage. And now, airlines may start charging if you breathe in there. So they're charging a lot, right? So think of 15 people, 16 people flying and spending even $300-400. If they don't have to do it because they can drive, now they can spend the money in where they stay and also enjoy their stay in the place as well. Okay. Second, scarcity of luxury cabins. So Smoky Mountain forever has been known for, people would go there and spend time, like people from nearby like states, 5, 6 states, and spend time during major events like you have Easter, you have spring break, you have summer, right? You have fall, then fall like color changes, then you have Thanksgiving, and finally, obviously, your Christmas break, right? And what has happened is, as the cities close by have grown, people are looking for more experiences. So they want luxury experiences. They're ready to spend money. They want good quality kind of product. And that is right now the case over there. If you kind of go there, you can tell that there are a lot of cabins that charges $300, $400, $500 a night. Not many cabins that charges like $1,000 a night. And there are some. I'm not going to say there are none, but like still scarcity, and that's the gap that we want to kind of go after. Finally, like high returns and cost efficiencies. Purchasing in bulk, like we're buying 19 houses, allows us to negotiate better rates with the property management companies. Like you and I can go to Smoky Mountain today and buy a house, but when you go and say run it, if you're giving to a property management company, they'll charge 20%. That's their fees. But we are able to negotiate down because we can give them in bulk, like 4 or 5 at one time, and they're big, expensive cabins as well. So if you take the 5% across 19 cabins, that's $500,000. And $500,000, it goes back into our investor savings because we don't have to pay. And other thing is like having multiple units, like in this industry, helps boost your revenue at least 10 to 20% of the time. And the reason is, think of this like you have one 5-bedroom that can sleep 18, you have another 5-bedroom that can sleep 18. Now, I'm gonna promote this as one 5-bedroom, this a 5-bedroom. Since that together, I'm gonna promote them as 10-bedroom that can sleep 36 as well. You will say like, hey, are there really people who are looking for 36 beds? Actually, there are. It's small percentage, but the challenge is they never find a house big enough to stay. So what they do is they spread out in the whole area, but they want something close. So we will have the opportunity to give them this product where right next to each other, they can stay, but also enjoy the amenities. And finally, I'm going to talk about that interiors and features are phenomenal of these houses, and they're more amenity community, which we're going to discuss. Okay. All right, I'm seeing some questions coming in. Let me take a couple of them. All right, one question is about Smoky Mountain area. How is the tourism lately? Any impact from other tourism properties? So, okay, let me just go. I think you're marked now. So let me just go over here. So, I think look, there are a lot of places that people spend time. Like you can go to cabins, you can go to beach. You go fly out to different country. Like last year during Olympics, a lot of people are going to France, and it's cyclical, right? Like people may go to cabin this year, next year they may go to beach, and a year after they may go to cabin, and then next year they go somewhere else. So we look at average, obviously, how many people are visiting the area. So this chart, if you look at it, like it used to be 9-10 million for a long period of time, and then it has been steadily going up. I think 2023 it was 13.3. 2024 it was, I think, 3.5 million or so. So it has gone up. If you take just average of this over here and average of this, you can see 18% jump over here. And also we looked at about this area. We were looking at some surveys before we purchased it, did our analysis, and Smoky Mountain is one of the top 10 vacation spots in the US for the families. And we are targeting, for us, the bigger target is families who want to come and spend time over here. I hope I answered your question, but I'll cover more later on right now. So I think next section is market analysis. I know I touched a little bit, but overall, Smoky Mountain, if you've not been there, there are like actually two big cities in there. One is Pigeon Forge, which is kind of valley, and in there you have one strip called Parkway, and on both sides of parkways, all the attractions that people come for. Think of that as Vegas Strip with all the kind of casinos on both sides. And the other thing is you have, Gatlinburg, which is kind of the mountain area, and there are cabins spread over there. Gatlinburg is more like, your cabins are not close by, they're farther apart because they're in the mountains. And when you go up, stay there, you kind of don't come to Pigeon Forge area on a daily basis. You're kind of staying there because you like that view. I mean, that's great. We are going for a different clientele. We're going clientele who wants to live, stay close to the attractions. There are families with kids who wants to come enjoy these attractions. That's the clientele we are going after in this project. So it was ranked also a few years ago as #2 vacation rental. I'm sure it was close to COVID. And overall, there's a demand for kind of luxury cabins that we want to capture. Okay. Kind of went over this earlier, like why we picked Smoky Mountain, and we want to make sure there are a few key things that we see in the area from macro perspective, like growth is obviously one of them, popularity another one, and that people are able to easily access it. So as I said, people can drive over here within 8-9 hours, like 1/3 of US population. Okay. Property information. So as I mentioned, this is where our property is. And this area over here that I'm showing you is Pigeon Forge, and this is kind of the valley surrounded by all the mountains. This is a Gatlinburg, and Gatlinburg, all the cabins are kind of in the mountain over here. And this is Dollywood. So Dolly Parton, as we know, great country singer. She opened this theme park back in 80s, and obviously drive a lot of crowd over there. She was actually, this year is the 40th anniversary of Dollywood, and Dolly Parton was there, I think, a couple of weeks ago when they opened it. So one thing I want to stress over here is as I said, our primary objective is proximity to all these attractions over here. So this is a parkway that I was talking to you about. This is one of the attraction island of Pigeon Forge, but all across this parkway and this road, right, where people go over there. So this community where we're purchasing has 4-bedroom, 5-bedroom, 6 and 8-bedroom. We are only purchasing 5, 6, and 8. We wanted to go a high number of beds and a high number of bedrooms. And as you can see, like our property is within 4 miles of island, and all across over here, this 4-mile drive has attraction across it, 6 miles from Dollywood and 12 miles from Gatlinburg if they want to go over there. Okay. About a cabin, as I said, 568, 3,500 square feet to 5,400 square feet, can sleep anywhere from 18 to 30 people. One thing over here I want to stress out, like this at the bottom, you'll see there's a difference between these two cabins. So this is standard roof, and we have these cabins as well, and this is rooftop cabins. So what developer is doing is taking this same 5-bedroom, he is literally flattening the top one and creating a rooftop, and it looks phenomenal. Like you literally have 850 square feet on top of hangout space. There's a great porch in front with fireplace and couches in the back as well. And inside you have a big screen TV, couches. You have games. You have pool table and arcade games, all the good stuff. A wet bar for everybody to kind of enjoy and hang out. So this is a way when you, and the views from that high is also very nice. So it gives you kind of why you want to come and stay in Smoky Mountain or Mountain Place cabin. Overall, every house we're purchasing has a indoor pool. So there's a 25 feet by 13 feet indoor pool, a heated indoor pool. It's heated, so obviously folks can use it all year round. There's a private hot tub on the deck. There are arcade games and a game room for kids and even for adults. And there's a great indoor movie theater room where with recliners, 85-inch TV, and Sonos kind of stereo system. It's phenomenal if you go and watch movie. It feels very good. And another thing that I want to stress over here is that these houses that we're purchasing, they are turnkey delivery, meaning all the is fully furnished. We are getting everything they want. That means we can rent it out right away. So, think about if you have a house of 3,500 or 5,400 square feet, if you have to put in semi-luxury stuff like your king-size beds and your, 75-inch square TV or 85-inch TVs and stainless steel appliances, hot tub and all those things, you can spend anywhere from $150,000 to $300,000. So the price over here includes all the things that comes in a house. Okay, so just showing you some pictures, king size beds, And for the in the one of the rooms you have bunk beds also for kids, and each of these bunk bed has a TV, so you can see right on the top over here has TV in there, so kids can literally plug their phones or watch a movie or whatever while they are laying down. Over here, it's an open space. So as you walk in, this is a view from as you walk in on the right hand side. Right before this is the dining area, then kitchen, and then the living room. Um, this is the pool. So as I said, you have about 25 feet by 13 feet pool area over there. Then you have a private home theater, game room. Actually, what we have done is just FYI, like we started purchasing these houses back in December. So we already closed 4 of them. We are in the process closing 3 to 5 in the next 2 to 3 weeks. And so we will already be, close to about 9 or 10 by end of April. And for the remaining of them is what we are right now raising, which would be close that happens end of April, early May, right? So what we've done is for each game room, actually, we purchased and we've added a PS5, and that has been a very good hit with the families with kids, and we can see that in the reviews as well while they talk to us. Because kids enjoy PS5, they can just log in. Now it's like all online. You can log in and start playing your games. And this is the hot tub, right? Every deck has a hot tub with good views. So when you're there, you rest, relax, and enjoy as well. Okay, now the kicker over here. So one great thing that this developer has done is, so a developer is local in the area, born, brought up there, has spent all his life in building multi-family apartments and vacation homes, and has worked in the entertainment industry in Smoky Mountain. He owns like zip lining as well, has worked with Dollywood, etc. So one thing that he did was he actually uh, 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 planned out and said he's going to build a water park in the community. So actually, you drive in from the top, and when you go left over here where the yellow car is, and go up, that's where all of our cabins are. So it's very close to the water park. But in the water park, he has given a lot of great things. Like you have infinity pool, you have a lazy river, there's an outdoor theater, there is splash pad for kids. There are actually 2 soaking hot saunas. There's a lounger, there's a putt-putt, and he has also actually this is a green, and he's created like over here the back putt-putt golf, like there's nine hole, and over here he has created a court for pickleball. So these amenities, there is no other community in Smoky Mountain that offer these amenities. Now, this is one of the key reasons why we got fell in love with this project. Why? In this business, one key thing is what differentiates you from others. If somebody has to spend $1,000 a night, and I'm saying, hey, not only can stay in a house that has all these things, right? Indoors, swimming pool, hot tub, all this thing. And mind you, like indoor swimming pool is not easy to get in a lot of older houses because they're built, they were not there. So that's kind of rare. It's not like every house has it. Plus, you will have access to this. So only guests who are staying in the community in our houses will have access to this water park. So this differentiates us from everybody in a meaningful way. On top of it, these rooftop houses, there are only 22% of the houses in the community are rooftop, and we have purchased 40% of them, right? So 9, 10, we have purchased it. So from our perspective, what we are offering to all the guests is, hey, if you're going to pay $1,200 somewhere, you can pay $1,200, come here with us, stay in this house, get all this plus this. I think it will be hard for anybody to beat us. And it's not that we are the only one in the community. There are other people who purchased it, but there's the other benefit I'm going to talk about why we feel we have a good competitive advantage over here. We feel we are competing probably with good 2 or 3 property management companies that may be operating some other cabins, but everybody else who's doing individually bought their one house for investment perspective or managing themselves, which they are not our competition because they are not able to provide all the amenities, all the services that we are doing it, which I'm going to talk about in a second, versus what they are doing, which is managing from their houses, or they hire a small company and the services are not what should be. Okay, so these are some pictures: swimming pool, splash pad, soaking spa, and lazy river. And actually, this water park just opened 10 days ago. So I'm going to show you some of the pictures, the real pictures, so you can get a feel of it. One thing, these community, there were first 20 houses built last year in Q1, Q2. And what I did was, like, I said, okay, let me capture like what people are saying who have been staying over there. Mind you, they were staying over there when the construction is happening. So these are people who stayed in cabin last year in summer when construction happening for newer cabins, right? Overall, if you look what they're saying, community located, luxury. So location was key for us. We want to be close to the attractions. Why? We are targeting families who are coming there. And like when we all have gone to Disney Worlds of the places with kids, and you take kids out at 9 or 10 o'clock, and by the time 2 or 3, they're done. You come home and they don't want to go back. So we want to provide a product to our customers where they are able to go in the morning, come back, but you're so close they can go back again for dinner or something. So they're literally 5 minutes away from everything else. So the location was key for us. Again, if you can see, like, the person also put close to everything, would love to return, enjoyed stay, cabin is amazing, floor plan fit our stay. This is also important thing because when you're a bigger group coming in, what's very hard to find is where we can all kind of hang out. And these houses provide like multiple level of places for people to hang out. Like obviously you have a kitchen and open area, kitchen, dining room, and living room. But then there's when you go one level below, you have your swimming pool, but also your home theater, and there's a deck behind that. Obviously, deck or porch are on the first floor and also on the ground floor. Uh, and and then you can go, if you have a rooftop, you can go up to the top, right? You're 800 square feet over there to hang out. So that's a key also when you're coming in bigger group. Again, location is outstanding, a mile off the Parkway. Parkway is the strip that I was talking to you about. Okay. Overall, I think when I captured this, 94% are 5-star, 6% are 4-star. That's what we want to see, that people are enjoying the stay. And mind you, like this is when construction was going on, and there was no water park as well. Water park just opened 10 days ago. Risks, want to make sure we understand the risk in this business. Like one is like your home, you have refrigerator can go out, you have your air conditioning, your appliances, all those things can go out where you have to spend money. Now, these are newer cabins, so first year everything is on the developer. If anything goes wrong, we just call them, they come fix it. And there's a warranties, 2 to 3 year warranties on all the appliances. So first 2 to 3 year we kind of covered. But what we're doing is from day one, we're putting $5,000 per year for a cabin as a reserve. So overall, we're putting $100,000 as reserve on maintenance. So by the time we are in year 2 or 3, we have built about $200,000 to $300,000 worth of reserve. And if we have to use it, we'll use the reserve in making changes, fixing things, but we don't expect to use all of it by the end of 5 years. So whatever is left, when the project is done, we give it back to investor. But we want to keep the reserve as a mitigation to the risk. Seasonality. Now, great thing about Smoky Mountain, like if you buy a cabin, like we have investments in a snowshoe, which is a ski resort, or in Outer Banks in North Carolina. Now, on the ski resort, you have 2 or 3 months where you make all the money in the year. The risk over there is if one year it's not a lot of snow, or there's a snowstorm and guests cannot drive up there, you lose a lot of money. And if you don't make money in those 3 months, it's very hard to catch up. Over here, there's a good 8 months of seasons where people come to Smoky Mountain. Like I was saying earlier, like your mid-March picks up as spring break, because and the spring break, it's like 3-4 weeks. Why? Because again, Florida, all the up to Virginia, they start in mid-March. Like our kids, spring break is second, third week of April. So there's a few like 3 to 4 weeks when spring break is happening across different part of the states. So people can obviously drive down there. Then end of April, you have Easter. Easter weekend is big. People drive there, and they decorate in a very good way. People come and enjoy Easter weekend or the week over there. May is a little bit slower because it's just, school's ending, people are going back. But then end of May, June, July, August, summer months peak. Everybody wants to go and spend time. It's like phenomenal. Think of it as like going to Disney World, but not as big, but still that's the experience. And then September becomes slower. Just school opens and everybody's kind of focused on getting things done. And October, surprisingly over here, become busier for a few weeks. Is because of the change in the color, the fall leaf change color, and the clientele that comes is like empty nesters. People come in and want to enjoy. Then end of October, early November, slow, but then end of the at second, third week of November start going up. Thanksgiving time, and then December, obviously your holidays and Christmas. So that's why I think there are good months, peak months where we can target our guests. Economic downturn can happen in every business. Things can go south for a variety of reasons. One thing we're doing over here to mitigate is we are putting $1 million as a reserve. We're not going to touch it until unless we need it. But if there's a sustained long term, like where the market has gone down a lot, we're going to tap into it if you're not able to pay a mortgage. But obviously, these are extreme situations where we want to make sure we have a plan over there. Market saturations, we'll keep an eye on any other community that's coming up. Right now, there's nothing over there that competes with this product. But again, if something comes up, it's good because it tells us that this is a great product and somebody, there's a market for it. But we have a 5-year project plan. I think if somebody even starts now, it's going to take 2, 3, 4 years for them to have a product ready. And so far, we haven't heard anything like that. But we'll keep an eye on that. Finally, vacation rental, your legal risk, regulatory risks. Tennessee did a good job. I think their Supreme Court back in 2018-19 passed a law. What they did was they said, okay, here's Tennessee. I'm going to just create these zones where you can have vacation rental and where you cannot. So they just said, okay, nip in the bud, like everybody knows it, where you cannot have it, so that we have no issues. So like, Memphis, Nashville, and Smoky Mountain, they've carved out like these vacation rental zones. And obviously these houses are over there. Yep. All right, there's another question coming up. It is about the maintenance and operation cost. We've been asked, like, what happens if we have to dip into a lot in year 3, 4, or 5 more than what we have? Look, these are newer houses. We don't expect things to start breaking in year 3 or 5. Obviously, we've done our inspection, and first year is all on builders. Like anything goes wrong, they're going to come do it. And then second, third year is, we have like a warranty as well for the first 2 years. Now, things will go wrong. Like I'm not saying everything is perfect, but we don't expect that majority of things will go wrong. And this guy has built a lot of vacation rental houses and multifamily apartments. Actually, one of our employee lives in one of the multifamily apartments that he has built. So we know the quality of the work that he does, and we talk to referrals and a lot of people locally as well about what he has done and his good reputation. So we don't expect like there will be more than normal like wear and tear what any house can have in year 3, 4, 5. But this is not like 20-year-old house where it requires a lot of maintenance. Right, so it's a big difference. And that's why we're keeping some reserves as well. So by the time we're in year and 2, we have like 100 to 1,000 built in that if something big happens, like 5 houses, fridge went down. I mean, I don't expect to happen, but if you have to buy it, then we can purchase it. And for everything else, like roof and everything, we have insurance, right? We're obviously getting insurance for these houses to make sure anything unexpected we're able to cover. Hope I answered your question, but let me know if there's anything else. Finally, probably what you guys are here for. I think quickly over here, like we have cabin prices anywhere from $1.9 to $2.3 million. 6 bedroom or 5 bedroom, and 6 bedroom are between $2.1 to $2.7 million, and 8 bedroom is $3 million. Total project cost is $45 million, equity of $30 million that we are raising, debt of $32. Okay. I'm going to talk about these classes in a second. There's another slide. Overall, let me just talk for a second over here. So what we have is we have different equity classes, how an investor can invest. Class A is a pure debt. You invest money and you get 10% return, but you don't participate in equity. So it's pure debt. You put $100,000, you get $10,000 every year. Class B is your second class where investors will have equity, they will get 7% return on a yearly basis, 7% coupon on a yearly basis, but overall the return projected is about 16%. And Class C is the third class that will make about 18%, but they will also have 7% coupon on a yearly basis. Now, one thing to note is over here, the risk goes up as you go down. So when you have cash available from operations, Class A has a first right to that cash, then Class B and Class C. That's why Class A will make the least amount over the course of project. As you can see, 10%, 16, and 18%, right? And Class C will make the most at the end of the project. But it has the highest risk because first right on the cash has Class A, then Class B, and then Class C. So one other thing I want to point out that GPs, like the operators, we are putting our $1.5 million in Class C. Now, this we have followed this methodology in our other project as well. The overall goal is that we will put us in the game. We'll put our money in the riskiest class. For us, the carrot is we make the most return, 18%, if we meet our project goals. And our investors like that because obviously we're in the riskiest class, but we can make more money if we perform well. If we perform well, that means A and B are also getting the money back. And it's not like Class C is not open to investors. Any investor can invest as well based on the risk profile. Overall sources and uses, our debt will be 32 million. LP equity we're raising is 11.6. As at VGP are putting 1.4 over a $45 million. Purchase 43 million. Another thing is like since we're buying in bulk, we were able to negotiate $500,000 of closing credits from the developer. Reserve, this is $1 million I was talking about. So overall $45 million with some closing costs and fees, 1.5 million. Okay. This is a 5-year pro forma. And now 2025, like we are getting these houses, I think until June. So it's not a full year. But taking 2026, which is a full year operations, we're projecting 5.8 million in revenue. Which include 730 of cleaning fees and 5 million of the rental fees, with $2.3 million for the expenses, with an NOI of $3.4 million. Now over here, a few things I'll point out, like you will see expenses about for your house what you pay, like insurance, water, internet, HOA, electricity, maintenance, etc. Insurance actually is very cheap in this area. Like for $2 million houses, we are paying $5,000 to $6,000 a year. And the reason is in Tennessee, you cannot sue, I think, liability more than $1 million. They cap it over there, so there's not insurance high. Another thing is the taxes. Like right now, so they, I think, review, like they go and look at the property value every 5 years or so. Right now, for the houses we purchased in December and purchased in February, we paid, I think, $6,000 to $7,000 in taxes. So we believe that in 2026 they will reevaluate it. It may go up to 12 grand. That's what we took in our underwriting, 12 grand per cabin. But still very, very cheap compared to like other states. I'm sure some of the attendees over here from New Jersey and, obviously your state property tax is way high. So those are actually other two things that we really like because then you can control your expenses. Like other places, we have multifamily apartments like in South Carolina, Georgia, and we are renewing our insurances and they've gone up 20% from year over year. So obviously, it helps us manage our cost accordingly. Let's go next. So this just gives you more detail of all the 3 classes. So Class A, you make 10% annual preferred coupon with minimum investment of 75,000. Class B will make 7% annual coupon, $75,000 minimum, with a projected IRR of 16% at the end of the project. So how you make 16%? So we have option to refi, let's say in year 3. So basically you increase your cash flow, interest rates, it's projected to go down. 3 years from now, they will go down. And then when you refi, you get a cash out because my property is worth more. And from that capital event, we will give money back to our investor based on number of shares they have. And there's some split between GP and LP based on where the money is coming from. This class is a fund of fund managers, so I'm going to skip that for now. And fund of fund is like, we have fund managers who are also bringing some money and kind of how the distribution happens up there. And then Class C, overall will make 7% as well on a yearly basis. and this coupon are paid quarterly, but minimum investment is at least $250,000. And the split between LPGP is 80-20, and projected IRR is 18%. So you can say 16% and 18%, these are two numbers to look at. 7% and 7%, these are the same, and the minimum investment is different based on B or C. Okay, high risk and high return as you go down. Okay, exit strategy. So base case is sell in 5 years. So the idea is to grow the revenue. So if I go back over here, as you can see, NOI, I think let's say next year is 3.5. We projected in next 4 or 5 years, increase another $600,000-$700,000, right? So increase that $600,000, $700,000, but overall NOI, if you take that and you apply 8% cap rate, so vacation rental right now we're purchasing at 8%, and we say, what, if that doesn't even compress, we're gonna get a return where we can give 1.9 to 2.1x to our investors. Other thing that we will look at in year 3-4 is refinance. So let's say Fed is saying we're gonna cut rates a couple of times this year, maybe 3, and then more next year. If by the time we're in year 3 and 4, right now we are getting our financing at 7.25%. So even if they cut by 100 basis point and we are at 6.25 or 6, if I apply this NOI of year 3 or 4, 3.6 or 3.8, we'll get decent amount of cash out from our refinance. So one plan is to retire like Class A entirely, like $2.5 million, give it back to our investors. And second thing is even retire some of the Class B. So then remaining investors will have a higher equity and higher cash on cash flow from the project, right? But those decisions we'll make when we are closer to like year 3 and 4. When we look at the macro conditions, see the interest rates up. This is sensitivity analysis. As I said, 8% is what we are saying what we will exit at. But if interest rate goes down, what happens is as interest rate go down, the cap rate compresses, it goes to the left. And as cap rate compresses, your returns goes up because the price of the property will go up. So if you get base case, you are 16, 18. If it goes left more, you can go up to 20, 21. In a scenario, let's say for whatever reason, interest have gone up, so cap rate goes up 8.5, you're still looking at 15% return. So yeah, it'll be less than what the base case is, but still it's more than 10, 12% is still we are projecting 15%. Okay. Overall, the execution is we have these 3 classes, and we have created a Smith Creek Investment LLC, which is a fund, and all the money that's coming through these classes is going here. And then we are purchasing each property, which is in a separate LLC in itself. And each of this property is owned by Smith Creek Investment LLC. And this is a manager LLC where we are, and we are obviously putting our money in Class C. We're the one who's collecting all this fund. We're the one who will be managing all the projects, so end to end. So that's manager LLC. So that's how legally this is structured. As I said, investment opened in December. We closed 2 houses in December. We closed another 2 in February. I think these 5, my guess is probably early April. We are working with lenders right now, just we're going through the whole process. So if not end of March, probably early April, close this. Then end of April, another 6, and then rest in May. So right now we are raising more capital for end of April closings. Okay. I think that was my presentation. Obviously, our subscription is open. First come, first serve in terms of the shares in different classes. And if you have any question, obviously you can send an email to investors@vestiocapital.com. Some of you even know me, so you can send me a text, email, or call me. Happy to take more questions. All right, I'm going to pause and see if there are a few more questions that there are, and I'm going to touch upon them. But if you have more questions, please add them in the chat. All right, the question is about the water park. Yeah, is it open, and what's the initial feedback? Yes, water park is open, and I'm going to try to show you guys some real-time pictures, which are phenomenal. Okay. Let me do this. So this just opened up 10 days ago. It's called Rambling River Parkway. And This is obviously what I showed you, the rendition. But here is the infinity pool. So it can hold about 75 to 100 people. Here is a splash pad. This is for kids to run around. Here is your soaking spa. There are two of them. It's a big spa, you can have 30, 40 people kind of sit in here. Here's your infinity pool. So you can see at the back, these two are spas, basically this one over here. And you can see at the back over here, which is a 9-hole putt-putt green. This is the outdoor theater. So the giant screen, you can just sit over here, have a nice day and watch movies or games, etc. But overall, this is a live drone shot of the whole area. So you can see over here, putt-putt green. This is a lounger with fireplace, two hot saunas. You can the sunbathing over here. There are chairs, kids to run around, swimming pool, and over here you have at the back uh, you have the pickleball court as well, and there's a green for people to use. So I think overall you drive in from here, and then when you go on this side, go up. These are all our cabins, but overall community has this information. So the roads, as you can see right now, the construction is happening. So they're gonna pave the road again, I think sometime in end of April, when all the construction up front is finished. Okay. Hope I answered your question. And yeah, initial feedback has been phenomenal. I mean, I was there last week, and guests are just going there, and we give them a code that they have to use to on the gate. We have right now it's open until 5 p.m. and closer to May, it will be open until 10 p.m. because I think we are going to increase how many people are working. Because when this is the clubhouse over here where you go to get the clubs for your putt-putt golf, or you go over here get your rackets and balls for your pickleball, all those things, right? So we have one person over here who will work from like 10 to 4 and then 4 to 10. And then obviously we have some tech people. If any issue comes up, take care of it, landscape, everything else. Okay. All right. I know we are at the top of the hour. I hope answered all your questions. Let me know if anything else I can answer from an investor perspective. Happy to share the steps you can take, but quickly to show you what you will have to do is you go to vestiocapital.com. You go to investors over here on the right, and you sign up. As soon as you sign up over here, you will log into our portal. And when you log into our portal, so you just get registered now to invest. When you log into a portal, you will see Smith Creek Investment as the only one for you available at the time. And there are two documents you have to sign with operating agreement and PPM. PPM basically we will automatically fill a lot of things based on the profile you create. But over there, you're just defining it. Hey, I want to invest 75, 100, 200, whatever in class A, B, or C. And then once you sign it, it comes to us and we sign it. And those documents that are available in our portal for you to review or see anytime. And then on a quarterly basis, you will also add your bank account information. So we'll use that to send you your coupon. And right now for this project, since we are still purchasing it until May, June, your coupon will start probably Q3/Q4. And then obviously from next year, you'll have quarterly dividends that will be paid to you. And we'll upload all the financials there so you can see, what has been the quarterly, the revenue and the expenses. And we send monthly newsletters just to tell you what's going on. We'll tell you good, bad, and ugly, everything. Like when Water Park opened up, we sent a newsletter telling all our existing investors what has happened. If we find any issue in future, we'll let you know. We'll keep a very open communication. We also do like once a quarter, sometime early, sometime sooner, or sometime we can do it once every 6 months. A meeting with our investors where we invite everybody. It's a kind of state of the union. Let them ask any questions, go back and forth, anything their concerns or what we are finding very good, we talk with them about it. So overall, that's the next steps. I hope this was informative. If you invest, great. If not, then I hope you learned something new today. And let me know if you have any questions. And I'm going to be sending video recording and also link to the deck by tomorrow, so you guys can review and look at it. Okay. All right. Thank you, everybody. Appreciate you giving the time on a weekday at 8, 9 p.m. at night. Hope you have great rest of the night and also this week, and look forward to talking to you. Take care. Bye-bye.